The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour. We got the S&P's up 5 points, the Nasdaq's up 18. Russell's currently up 6 points, and the Dow's up 92 points on the day. Gold's up 16 points. Silver is up about 1%. We got copper pretty flat on the day. Oil is also pretty flat, only up 11 cents right now. We got natural gas up almost 0.5%. Corn just down like $1.50. So we got soybeans up $4, euro dollar's up 27, pound dollar's up 27. Aussie dollar is down 12, euro yen up 33, dollar yen down 4, pound yen up 14, dollar CAD up 37, dollar franc pretty flat, just down 2 pips on the day. So checking that out, not just a massive movement right there in the Forex markets. We'll go through, we'll check out each market. And, look at a few other things on the chart, see if we can pick up anything that might be helpful for when you're doing these trades on Nadex or otherwise. Looking at the deviation levels, making sure you understand the deviation spike reversals. That's one of the coolest trades. I did a show on that about, it was a week, maybe 2 weeks ago. And a lot of people really benefited from that. And so I want to go through and just do a recap for those that missed it and sort of to help out with other things. So with that in mind, let's go ahead and do a walkthrough on some of the markets and look and see if we see anything. Okay. And you can do multiple time frames as well. A lot of times I'll actually have a chart set up with a 5, 10, and 15-minute time frame. But one of the things I look for is when I hit a deviation level. Now the best ones are 1 deviation, but you're not always going to get that in a day. When I hit a deviation level, I look for what's called a spike reversal. Okay, so right here, here's the Russell. We literally just had one. And so let's check it out. So the market's going up, it hits a deviation level, and the volume spikes. Especially when this happens, this is another little tidbit of information, when it happens right during lunchtime. Because a lot of times, that's the big boys dumping off their shares and going home. Okay, so the market stops going up when there stops being buyers above the market. Not because of sellers, because buyers above the market are no longer there. Market stops going down because there's ceases to be sellers below the market. Okay? And that's when it'll pop back up. So on a spike reversal, how does the trade work? What do you do? Well, what I look for is to hit on a deviation line, either like during lunchtime or a 1 deviation line, and then I look for literally the volume bar to spike. And I define a spike as basically this bar is twice the size, this volume bar right here is twice the size of the volume bars on each side. So pretty simple. So not really rocket science there. And when that happens, so like right here it hits up, spikes, hits a deviation, starts pulling back. I then look for the bar after that, this one, to see if it will break lower as a potential trade. This helps me out in a lot of things when I'm doing trend trading. It says, hey, you know what? You may want to tighten up your stops, maybe even be cautious about adding into another position at this point. So there's a lot of different ways to do these trades. You can go for an out-of-the-money contract. You could go short the market with a stop loss just above it. You could do a premium collection trade. And, I want to show you a few of the things that I go through when I'm looking at these. So I have a 5-minute. If possible, I love it when I have multiple time frame confirmation. So I'll check like the 10-minute, not really seeing at all a volume spike on that. I'll go over, I'll check out the 15-minute. And again, I'll have all 3 of these stacked on top of each other. It's just sort of hard to fit it on this screen for sharing them here. But, we did get a nice little spike there, but really not a volume spike. So like check out right here this morning, like on the 15-minute, we had this big volume spike as the market retraced back down to settlement and then bounced right off of it. Letting you know, hey, you know what? May want to be looking to go long for the day. And so that was a great signal to go long right there on the 15-minute charts. Obviously, the bigger the time frame, the stronger the signal. So we got the 10 minutes there. We can go back over. We're not seeing it there. We're on the 5 minutes. Now, what I'll also do is I'll hop through and I'll just look at different indices to see if I'm seeing a consistency of that volume spike. So we are seeing it on the NASDAQ. Again, we also saw it over here. And this will be one thing. We'll go ahead and check this out. We saw it over here in the morning. Right there when it bounced off a settlement. Came in. Boom. Volume spike. Came back up. But let's look at the 10-minute. Okay. So we got that. Not really seeing the volume spike right now on the 10. We'll also check out the 15. And the 15, we definitely got that volume spike right in the morning. Now, of course, we expect the volume to be higher in the morning. But, I mean, lower and then lower, right? I mean, it just literally like tapered off like 15 minutes later. And so, you know, always be looking for that, be aware of that, especially when it's at a deviation. And the settlement does count as a very important pivot or deviation level. And, again, we post these every evening inside the scanner section here. You just go over to the scanners, and right in there there'll be a link for the deviation levels. So that way you can know what those levels are for each market, you know, futures, Forex, and, you know, commodities, all those. We list a bunch of markets on here that you can check them out on. Now, let's look at a couple other ones. We'll go in, we'll look at the Dow. And I like to have 3 time frames up on all 4 indices to see if I see any kind of consistency on them. Because the more consistency I see, the better it is. We did get a volume spike. We weren't at a deviation level on the Dow. It did pull back when the other 2, though, were at that settlement price. We're not seeing, of course, a 15-minute one over here. Now, rarely do I get all 3. If I do, I mean, I'm pretty excited. I usually go pretty heavy on a trade like that. But usually, you know, if I can at least get it on all the indices, then that makes me feel, I guess you could say, a little bit better about the trade. So it increases the probability. But so we're not seeing it on the Dow at all. We didn't get any volume spike, and we're past the deviation level. It's sort of hanging out a little bit differently than the other 2 indices. Notice it hadn't come back to settlement at all. At this point, it's just sort of hanging out on these. Hasn't really bounced off a deviation. And then we'll check one more out. Let's go ahead and check out the, so we got the Russell. So just to do a quick review here. Got the Russell. We did get the 5-minute volume spike. We got let's check the NASDAQ. And on the NASDAQ, we are having that volume. Let's see if it actually qualifies as a volume spike. Sometimes you got to get right down into it right here. So we'll look at it. Let's see, volume 525, volume 1800. Volume 1,000. So it's not technically a volume spike on the NASDAQ because, again, it was close, but it wasn't double. What this bar right here was not double this bar's volume. And so that basically gives us 2 out of the 4 that qualify. And so if we did go with that trade, what would we do? How would you play this out? Okay, well, you go over to the scanner, and there's 2 ways to do it. Let me see if I can sort of get both of these on here at the same time. 1 second. There we go. Okay. So go over here to the binary scanner. And then what we're going to do is go, okay, well, what are the ways I can play it? Well, I can either do in the money or out of the money. Okay. And so if I was doing in the money, I'd go over, I'd select the small cap. And you could actually reset your filters. Literally just to make it really simple, hit in the money. And I don't need the weeklies, so it's Thursday. I would look at weeklies on Fridays maybe. I'm going to scroll down real quick and just see what do we have that might qualify on the small caps. And it looks like there's really not a whole lot. But again, reset all your filters. That way you make sure you're seeing everything there is to see. But I go over here and go, okay, well, if I want to look at every contract to make it simple, and usually when this happens, I'm usually targeting the next deviation or I'm doing an in-the-money contract. If I'm doing an in-the-money contract, I usually want it to be above that volume spike area, like 1116.6. So I may go in and look to sell. There you go, 1116.7. That expires at 2 o'clock. So if I go in, I sell that contract. That would be how I do an in-the-money contract. And you see, as it is coming off that volume spike, I had at least 2 of the indices lining up. And so that's one way to do the trade. And I to sell the 1116.7 contract, which you could have got in for anywhere between 30 and I guess now about $10 at this point. Okay. Now the other way you could have done it is you could have went in and if you scroll down a little bit here, you can potentially target as low as the next settlement level. If you wanted to, that'd be going all the way back. That'd be basically what's known as a gap fill at this point. Let's see if that technically would be a gap fill. Wouldn't technically be a gap fill because we actually did hit the settlement price already today. But that would be where the next deviation level would be. Now, you don't have to go that low. You only have till 12 o'clock if you're, or sorry, 2 o'clock if you're choosing the 2 o'clock expiration. So you might decide one that's a little closer. You might go, you know what, this is only a point down, and so you may choose like the 1113.7. Risk $25 on the trade, and put that one in. So you choose whether you're doing live or demo. You scroll down, and what's cool is if you'll do this at the right time, if you'll do it right when it happens, a lot of times you can get on a decent risk reward where you can actually do what's called a double binary. That's where I'll do both. Okay, so I'll go in and I'll sell one for like $25. And I'll sell one for $75. So if the one that I'm selling that's out of the money, if it doesn't move fast enough, then you know what? That's okay, because the one I sold that was in the money was profitable. And if it does go up and hit my in the money one, then I'm able to go in and use that trade. Still, I have the out of the money. So if it goes up, it hits it, and it comes back down, then I can get in that trade and be profitable. So let me lay out that scenario, because a double binary is probably my favorite way to trade the volume spike reversals. As you see, we are heading down towards that 1113.7 binary right there. So if it does hit below that, and that's the one that you sold, then you definitely could be potentially profitable on the trade as it keeps going. There it is. So right off that volume spike, and the best price you could have got would have been up here on this contract. Let me see if I can get for you a binary chart of that binary specifically, so we can look at it. Okay, so 1113.7. If I can pull up a chart on it, we can sort of look how the price, has been, where it was, everything else. And I'll wind it up. Let's see, we're on a 5-minute chart up here. And then see if it loads. Every once in a while these charts have a little bit, they're sort of quirky. But if I can get it to load up, then we'll check it out. But either way, it's moving down. But yeah, there we go. Okay, got it. It just took a couple. Sometimes it takes, if you don't succeed, try again. Okay, so right there, we got this moving, and you would have got in basically somewhere around in the 13:10 minute mark here. So right around 13:10, you could have got into the trade somewhere at the lowest 81, at the highest 91. Basically right when it hit below the strike. And you could have sold that. So if you would have sold it for 80, if you wanted a 1-to-1 risk reward, you could have bought back for 60. Okay? You also could buy back when it hits the strike. That'd be like 57. So it came down quite a bit here. And again, sold for 80, buy back for 60. Why would you do that? Because if you're selling for 80, you're risking $20 to make 80. Okay? So if we got in, we'll just say worst case $80. We'll look at adding on the other binary and how that risk reward scenario plays out, so you can learn how to double binary with it. Because like I said, that's my favorite way to do these, just in case they're flat. All right, stay right there. Be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so come on back here to the Diagnostic Trading Hour. And so just checking out multiple trades, trading opportunities, markets moving, and how do you put these double binaries together? You know, how do you make them work for you? And so the reason I like the double binary is because the higher binary can pay for the lower binary contract. And let me show you what I mean by this, because you can see how volatile they can be. So if I go over here and I look at this chart, I want to keep that one up. There we go. And I look at this chart right here, then what I can see is the ability to put an order up here at 1116.7. Okay? Let's go up here to 1116.7. It's right above the deviation. And then I put another one down here at, let me show you this, 1113.7. Okay? Now, if you enter these at the entry time, which would be right when this bar breaks the low of this bar. See, we got low, high volume, low volume, enter on the next, ideally on the next bar, but you're looking for the bar that breaks the low of the bar after this bar that confirmed it was a volume spike. So you get on that at 1310. Then what we're looking at over here would be 13.10. So like you're getting in right on this bar. And on this one, you're getting on the same bar there, same time. Okay, double binary would be the same time entry on that bar right there. So what price would you be getting in on? Bring these over here. We'll shrink that back out. Well, somewhere between 16 and 24, so probably right around $20. Because I mean, unless you got in like at the low after the bar closed type thing. So, but if you got in like this right as it broke the low of that bar, right around a $20 entry price. Okay. Then we go over here and go, okay, well, what price we got in this at? Probably right around $80. So what does that mean? How does that work? Well, if I sell for 20, that means the most I can make is 20. Okay? Over here, if I sell for 80, the most I can make is 80. But what's the difference? Well, if it stays below 1116.7, I will bring in $20. If it stays above 1113.7, I will lose $20. So basically I'm break even if it's neutral, if it stays in the range. Okay? Now some people will actually do, and I've taught this before, a double or a ratio binary where they'll go in and they'll sell two of the in the monies and then buy one of the out of the monies. So that way, if it stays in between the range, you actually still profit. Okay? But obviously with a downside bias. But to keep it simple, just looking at this, if it stays in this range, we basically break even on the trade. Okay? Now, if it goes up and it hits our higher binary up here to 1116.7, we exit the higher binary. We exit the 1116.7. And for somewhere around $50, we take on about a $30 loss. So that trade would lose $30. This one still has a $20 risk on it. But if we sold this thing for 80 and it comes down and hits the strike, we could exit for a $30 profit and be break even on the trade. Or if it went lower and we bought back lower, then we could, make additional money. Like I said, you can make up to $80. I mean, if it just started flying down, let's say you take profit at 10, well, then you sold at 80, bought back at 10, you made 70. Even if you lost 30 on the other side from exiting, you still, netted a $40 profit. Now, another, I think, just important tidbit is you don't have to wait to make the full 20. Let's say you just want to reduce your risk, okay? But you're not necessarily trying to 100% cover it. Every once in a while, you actually can fully cover it. But let's say you go in here and you sell this thing for $80. You may go over here and buy it back for, say $5. Okay? And therefore you make 15, you have 20 at risk, therefore now you only have a $5 risk trade on. You can leave that trade on. If it just goes down a couple points, then you're actually going to be able to bring in a nice profit of up to $80. And, also bring in 15 on that, that'd actually be a $95 trade. Now, if it just goes straight down and you left it on until expiration, the most you could make on the trade would be $100 because you could make $80 on the one you sold. That was below the market, the out of the money binary. The reason it's out of the money because it's not below it yet. And you could make $20 on the in the money. So we'll talk about what the max possible risk is when we get back if you just left both of them on until expiration. So stay right there, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so again, coming on back to the double binary strategy right here. And looking at basically what you're doing is you're selling an in-the-money binary to pay for the out-of-the-money binary in case the market goes flat on you, doesn't move, okay? And so what you would have done, you would have sold this one for $20 and then sold the lower one here for $80 and giving you a max profit potential of $100 and a max loss of $100. So you're at a 1-to-1 if you just held the thing till expiration, okay? Now, you can do, obviously, different things to help decrease that risk, such as if it goes up and hits your strike up at 1116.7, you could exit out of the upper one and take a $30 loss on that side. Your opening remaining risk would be $20. You'd only have a $50 risk on the trade. And so if you look at it now, I mean, this has really moved down quite a bit. We were up here. Now we're down at like $20 on this trade. Looking at it. So $20 right there is where the 1116.7 is. So that's a trade you could still be looking at if you are wanting to hop in on it as the market's, just obviously oscillating. And they'll move fast. I mean, that thing was at 20, 30, just minutes ago. And now it's back down at 13 on the bid side, 18 on the ask side. So right there you're looking at the mark or the mid price of the binary. So they move pretty fast for you, which is good. You can use that to your advantage, especially when you're like, if you sell a binary for $30, you buy it back at, say 15, 10, whatever, 5. For trading in the money binaries whenever they're closer to expiration and a little bit closer to the strike as a way to pay for other trades that you're doing. So hopefully you're starting to play with these and check them out. But that's, like I said, one method. The other method is, and I mentioned this a little bit earlier, was to do what's called a double binary. Okay, and that's where I'd go in and I'd sell 2 of the above and sell 1 of the below contracts. And by doing that, I bring in $40 up here. I only risk $20 down here. If it stays in the range, I'll make $20. If it goes down, then I could make 80 plus 40, so I could make 120. Now, if it goes up, I am risking as much as $60 right there on that contract, because I'd have to get out if it goes up and hits my strike. So it's just really important that you do understand how all those work. But I mean, just watch as these things decay right here. This thing's going from 20 to, we were around 20 over here. We came down here to what, $5? Went back up to 30. Another chance for entry on that one. Coming on back down. Now it's down at $10. So I mean, imagine a stock that moves from like 10 to 30 to 10 to 30. I mean, being able to hop in and take advantage of that. And that's what you can do with the binaries, because they're very volatile as they get closer and closer towards that expiration. Now, you may want to be a little bit prudent, set some take profits on your in the monies. Like I said, if you sell, say, 20, 25, 30, maybe you set a take profit for $5 or $5.50, or just whatever you want to do there. But you can set a take profit to grab that money to help cover the majority, if not all, the risk that you had in the short trade. On the short trade, there's a couple tiers of take profit you could do. One of those would be to, if you do more, let's say you do like 2 double binaries. So you do like you sell 2 above and you sell 2 below, then you could actually take profit on part of one of them. So when it gets down, like buy it back at 57 would be a choice for you. And then, you could hold the other one and buy it back at 10. So that way, you're covering at least the risk on that out-of-the-money binary immediately by taking some profit. So if you sold like at 80 and bought back at 57, then you have like a $23 profit on a $20 risk. That covers all the risk on the other out-of-the-money binary contract that you have. And now that other binary contract is sort of free to run. And you can think about also along the lines of, the old investment rule, at double, take off half. So sort of the same thing. So you have to do, of course, more than a single contract in order to be able to take advantage of that strategy. But it's I use it on straddles, I use it on strangles a lot of times, and you can even use it right here on the double binary strategy with it. And you can see, this contract, we went in, if you sold it at 80 right there, and it's moved down, moved up, sitting right around 85 to 90. But as it moves down, if it drops down another point in the next 22 minutes, okay, then that will be a profitable trade. And right now you'd be looking at about a $15, $10 to $15 risk on this trade, and you could collect only about $5 right now. It wouldn't be really worth selling the binary, sort of missed out on the in-the-money binary. Unless it moves back up a little bit, you're really wanting to get, around $20 for that in-the-money binary when doing a double binary strategy. But all this, again, is being based simply upon using volume spikes at deviation levels. So when that volume spikes up and it hits a deviation level on indices, especially around lunchtime, then often you will see a retracement happening. And you can either do the in the money, the out of the money. You could do both, a double binary or a ratio. You could take advantage of spreads if you wanted to. That is obviously a choice as well. You could look and see if there's any good spreads lined up that you could go short. A lot of times, though, I like the out of the money because I can go in and I can double or triple or quadruple the money on those pretty fast with a very small move. So that's one of the advantages with the spreads on doing, or the binaries versus the spreads for this particular strategy. Even if I'm not using this strategy on binaries, on spreads, this will be very helpful if you're a futures trader, a forex trader, a stock trader, type thing. Understanding the simple concept of spikes at deviation levels are very, very helpful because, when you're in a trend trade, like when do you tighten your stop? When do you stop adding in? When should you say, I probably shouldn't go short that market right now? It probably would not be beneficial to me to go in and or go long at that market right now. So like the market's been running up, you get another long entry to add on to your position. But due to seeing the volume spike, you decide to hold off. And so that's, to me, one of the biggest benefits of using this strategy is I may back off of an additional long entry just because of looking at that. And especially if I see like double tops, and things like we saw the Dow basically has had like just a triple top now, pop, 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 so that's going to make me a little bit more shy As well, I see the broad market index, which is the net shares in the New York Stock Exchange. You can get that through like an IQ feed data feed, Thinkorswim. You can pull it up as well if you have a Thinkorswim account. Then you just hop over. I'll show you how to pull that up on Thinkorswim. Let's see here. Move these out of the way. And we'll drop it on down to 5 minutes. And you just go $ADVN minus $DECN for, it's been a while since I've used it on Thinkorswim. So ADV, let's see if it's it. Yeah. Minus $DEC. Hold on, I have it. But I'll show it to you on the normal chart, and I'll pull it up on Thinkorswim, just in case you're using Thinkorswim, so that way you know how to pull it up. And I want to make sure you have the right setting. I have it built in here as well. So there's a lot of different advanced declines that you can use. There's advanced declines for each one of them, for each one of the indices. I prefer the New York Stock Exchange advanced decline. So because it's the entire NYSE, it's not just an indice. The indice ones seem to be a little bit too repetitive for me whenever I'm trying to do them, because I'll go in and basically see the same chart. Like, it doesn't really show me anything that's, I guess you could say, helpful on these. So let's see here. So I'll look at that and I'll go, you know what, this thing's really oscillating flat. One of the indices, I'm going to go look at the Dow. Let me show you what I'm talking about on the Dow, just to put some of these pieces together for you. And see, it just keeps hitting this high over and over and over again. So, you know, that makes me a little bit nervous right there about just adding in and piling in on additional long positions. Starting to see the Russell pull back. And so you start adding in the different pieces, and that's really what's going to help you out, is when you start putting different pieces together on these trades. And let's see, the one for Thinkorswim. Let's see, I got the symbol here. It is ADVN minus DECN. Maybe I just did a typo. Okay. Must have done a typo. All right, so right here. Yeah, that worked. Minus ADVN. I don't know what I was typing. Minus $DECN. So put the dollar before it, and you can see the advanced decline right there as well. And it basically just lets you see that overall broad market index. And what it is how many shares or how many stocks out of all the stocks trading on the New York Stock Exchange, how many of those are up for the day, minus how many of those are down for the day. So it lets you sort of see the trend as well. And usually, you know, the limits on this are about 3,000. So you can go in and, you know, you can even edit the scale if you want to. And I'll go in and I'll even draw a line, like right at the 0 line, just sort of lets me, you know, have a perspective right there. And so by putting in a, you know, line on the chart and keeping up with that, and then I'll add in maybe an 8-period moving average on it, just to get an automated trend, just sort of drawing on it. But we saw the move down and then the move up, and now we're just in this sidewards market at the moment. So I look at advanced decline. I'll look at all 4 indices anytime I'm trading an indice. I'll look for volume spikes and put all those pieces together. So see, now we're coming right back up to that same level. And we did get it. Now, this is one thing to notice. Check this out on the Dow. Sort of interesting. Is we did get a volume spike very close to the half deviation level right there. And notice how on that volume spike we did get a pullback on the Dow. We might get another volume spike right here at the 0.7, so that'd definitely be worth looking at. Okay, so look like right here, we might have another volume spike depending upon how this bar goes. So let's look at this one. We got right now a 488, 1,095. So we've already doubled the volume on this bar. If we get half the volume on the subsequent 5-minute bar, okay, so on this bar, if we get half the volume, then we could have another volume spike reversal trade right there on the Dow. So, anyways, just a lot of ways to look at it. Let's check out. We'll pull back the Russell up. And see, so now let's see it's starting to pull back down right there. And it looks like it's a, you know, it also has a big volume bar right there like the Dow did. So we saw it on both of them there now. And we can, again, you want to check all these. I have multiple charts up, but just to make it easy for the show, trying to scroll through each one so you can see the detail. Not really, again, on the NASDAQ, seeing the perfect volume spike there. Also over here on the S&P, you know, we did get a volume spike at the same time, but not necessarily at a deviation level. And that, I'll look at that, I'll consider that if it's at the same time. So I'm just trying to get all these style things out of my mouth and, you know, communicate it to you. But if I see, at 1 o'clock you get a volume spike on ES, on 1 o'clock you get a volume spike on NASDAQ, on 1 o'clock you got one on the Dow, at 1 o'clock you got one on the Russell. And 2 of those were at deviation levels, But they all had volume spikes at the same time. I'll probably focus, honestly, on the ones with the deviation levels. But I'll give more credit to it simply because we did have those volume spikes. And you can see we did have a volume spike right here on ES, and that pulled back as well, just like on the Dow. So now the question is, will the current 5-minute bar that had a volume, will it turn into a volume spike trade and pull back or not? So we haven't really been in a trend as much, and that's also something to give more credit to a trend. Like I wouldn't trade this as a volume spike trade right here. 1, we're not at a deviation level. 2, we're not in a trend. See, if you look at the 1 o'clock, what happened? Anybody can see, without looking to the right side of the chart, you can see obviously that the market's moving up. So we have a clear trend. We're making new highs there and higher lows. Okay, right here, we're just oscillating. So, I wouldn't necessarily give this credence for this being a volume spike reversal anything at this point, even if it does qualify. But I'm aware of volume spikes. I'm always looking at them, and because they will obviously signify turning points in the market. And no matter what method you use to trade, that can be very helpful for you. And so hopefully you can pick up a few tips right there. And you can do multiple of these at the same time. Let's say all 4 indices are up. And sometimes all 4 will fire off at once. Some of them may have a great opportunity. Other ones may not be near as good. So how do you look through all of the different binary contracts to find the ones that will work best for the trade that you're doing? So what I'll do is I'll go up here and I'll select the U.S. indices. Okay, like that. And then I'll put 65 to 95. And then I'll bring this down, maybe like the next 2 hours, depending upon what contracts I'm looking for. But when I'm doing this strategy, I'm usually expecting a pretty decent move within the next couple hours. And then I'll scroll down, and now I can look at all of the indices and see which ones have maybe the best setup, the best payout for doing the strategy. Because sometimes the NASDAQ will be a whole lot better than the Russell, or the Russell may be better than the NASDAQ, or the Dow may be better than all of them. Or they may all be equally good. But instead of having to flip through a whole bunch of different charts on the platform, I can quickly and easily simply hop on and do that. So if I do this on the platform, what I would have to do is, let's see here, I'll show you. We'd actually be doing right here is you'd be going in and you need all these opened up, okay? And you got to make sure, by the way, make sure you refresh, because you got to make sure you refresh it every hour if you're in the platform. The scanner automatically updates. But right there. And then now you got to look, okay, check the 12 to 2s, see what's there, check the 1 to 3s, 12 to 2s on small caps, 12 to 2s on NASDAQ, So you're going through all these, trying to remember it, trying to open some tickets to keep them open, maybe trying to add them to a watch list. All of that's taking you more time. This allows you to simply go, okay, what's available right here on the Dow, the small cap, the NASDAQ, and the S&P. And you see it instantly. And the risk and reward are automatically plotted right there for you, as well as the prices, the bid ask. And you can even add in simulations. So there's a lot of cool stuff you can do with it. And one thing we haven't talked about that much is the simulator. So we're going to go into that for just a few minutes after this break, so you can know what will binary be worth when the market moves.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. One thing I did want to do, I forgot about this, but we want to make sure we do cover any upcoming news trades. And so I want to make sure I do that because I know a lot of y'all are listening in for any details on those potential trades. So this morning we did have the dollar-yen, and that trade worked out really well. The market stayed right in between the range, even got some fan mail, I guess you could say, people who were doing some trades. And like I said, it stayed right in the range for them. They were able to put the trade on into this news announcement this morning and walk in a nice profit. So they bought the lower strike for 75, sold the upper one for 25 with a 1-to-1 risk-reward ratio, held it into the news expiration at 11, and were able to bring in about $50 profit on per binary butterfly that they did. So we have news coming out tomorrow, and 2 news reports. One of those being the pound on the preliminary GDP coming on out at 4:30, and you look at straddles and strangles on that. The expectation for the report on the pound is that it's going to come out at 0.8%. Okay, so that's the number that's expected. If we get greater than 1.1 or less than 0.5, we should see a very large move on the on the pound. And so what is the average move? Well, 70% of the time it moves 50 pips. And within a couple hours, the average move is 70 pips on the pound when this preliminary report comes out. And the initial spike is about 30 pips. Now, the report comes out at 4:30, and a lot of you may be asleep, so such as myself, when you do this. So what a lot of traders are doing that I've heard back some really good feedback on is they're going in around midnight because the 7 a.m. expiration, remember the report comes out at 4:30, the 7 a.m. expiration binaries open up at 11. So if you can get it within an acceptable risk reward on the trade, okay, so you'd be looking for, less than, basically $45 or so on the trade. If you could get a risk of $45 or less on a straddle, enter the trade, you have the buy, you have the sell, and then set your take profits at either a 0.5 to 1 risk reward ratio or a 1 to 1 risk reward ratio, and just let it do its thing overnight. And this is one very simple way to literally set it, go to sleep, not worry about it. Take profits are there, and they'll keep working even if you're not there and logged on. Okay, but you got to set that take profit. So as soon as you enter, you just go in and you set the take profit to work on that for you. So that's the first trade. Another trade just to play with, and I would definitely recommend probably demoing this. You could go back and you could look at September 27th, August 30th, July 26th to see how it's worked out. But this is the revised University of Michigan Consumer Sentiment Report. It comes out at 9:55. Okay? And so you want to look at a few of the different FX pairs, maybe even the indices, to see if there's any big impact. The reason I bring this up is you could look at like 10 a.m. straddles or 10 a.m. strangles, probably strangles being better, and where you could go in on the intraday like FX where they're only 10 ticks wide, and if you can find one that's right in between there, if that report comes out massively different, then you may be able to get like a 10-tick pop in either direction, and you're getting 10 minutes before the news comes out. So you're literally doing everything based on the spike. And it's not a massive news report, but since it comes out 5 minutes before the expiration of the 10 a.m., again, I recommend you demo this, but just as a test, and you can even demo it on every FX pair and every, indice, whatever. Hop on and try it. Just, put that in like 5 minutes before, or actually 10 minutes before the 10 o'clock report. Hop in, put the trade on, and then just let it go to expiration. So just sort of a fun test on that. But the pound dollar one, the main one, with that the GDP coming out. All right, we all have a great day, and we'll see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned for another great show right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.